All right, we're back, Matt. Crazy earnings report yesterday. We'll go over the earnings report a little bit in detail shortly. Some people show up late, so we'll wait a couple minutes. But first, I think we should talk a little bit about, like we normally do, the macro market and what's going on, and this big kind of correction today in the growth stocks in particular, or any stocks apparently with heavy exposure to China business. It seems. What are your thoughts on that, Matt?
Yeah, it's the market's been a little bit hard to read lately. I think you see, the a lot of the indices are kind of hanging out around all-time highs, but growth stocks in particular have been pretty weak lately. I think there's been, as we discussed last week, concerns about ongoing pandemic-related issues, but then yeah, overnight it seems that the concern switched to concerns about the Chinese government and crackdown on some of the Chinese names there, which appears to be impacting all stocks now. I mean, you're seeing a lot of the major indices down 1.5%. A lot of the growth names, like you said, are down 3, 4, 5% today. Tesla, after just an absolute blowout earnings report last night, down about 3% now, which is kind of crazy. So yeah, it seems markets
Imagine
are.
imagine how much Tesla would be down if it just met expectations, right? It could be down $100 plus. It feels like.
Yeah, or maybe it would just be up. It seems like there's no rationale with these these earnings reports
Yes.
and the actual numbers that are posted. Yeah,
Yeah.
no, I can imagine though if there was a big miss, it probably would have been much worse news for Tesla. But it does create opportunity, I think, and we're always looking for opportunity. So yeah,
Yeah. I agree.
how are you kind of thinking about this market? I mean, it almost seems like a lot of the investors are just kind of waiting for the next thing to be afraid of. You're
Yeah.
seeing, I think a lot of slow rises and then sharp sell-offs, and kind of interesting. In the Bitcoin had a huge run up too over the
Did.
weekend, and then just crashed hard after this Amazon rumors proved false.
Yeah.
What's your sense right now, kind of where we are in the overall growth stock market right now?
I mean, I think day to day or month to month, there's a lot of chaos, and it just kind of, you know, ebbs and flows the market, and we want to attribute it, in our head, especially with Tesla, for example, with the killer earnings and stock down, and the whole market sort of down, and we're wondering why isn't Tesla at least flat or up, when it had such blowout earnings versus expectations. I think a lot of it has to do with this, like the growth tech stocks in particular that are being hit the hardest. um, when you zoom out over a 5-year period or longer, I think the stock performs sort of in line with how successful the underlying business goes of the company. And even though we got a huge marker of success yesterday with Tesla's report, it's one quarter, and over 5 years, if they, that's a really good indication for our long-term view on Tesla for sure. But for
Hmm.
month to month, quarter to quarter, day to day, it's sort of like I read about or listened about quantum entanglement. It's just like you can't tell what the day to day movement is going to be. Or if you open a book and you look at one word, you can't tell what the book's about. You're just seeing that one word, and not until you put the book together. So not until you kind of zoom out over 5 years can you really, or 10 years, can you really zoom. And I just remember and Tesla is such an enigma in that it's like the biggest growth and disruptive. It's not just a normal growth. We categorize humans. We categorize things, right? And so you can bucket all the growth tech stocks, like pretty much all the stocks ARK Investments involved with, for example. But Tesla is like 2 levels beyond that in terms of like growth and disruptiveness. It's like energy paradigm changing, transportation paradigm shift, software. It's like this huge shifting company that's shifting the way we live, over a couple decades. And so it's the way it's going to behave is even going to be more erratic in some ways. When you zoom out over 10
Hmm.
years, it's going to make a lot of sense, but when you zoom into like even 5 years, it might not make sense. Like from 2014 to 2019, it didn't make sense, and it wasn't until like
It's
2019 it
true.
finally
It's
corrected.
true.
It felt like it corrected back to where it should be, or maybe it overcorrected as we're seeing now, or now it's going to undercorrect the other way for a while. It could be 5 years, 3 years. That's why we're not so heavy on the long-term options. We have some, but that's why it's hard to
Yeah,
forecast Tesla in particular.
it reminds me of that Warren Buffett quote that, markets in the short term are a voting machine, and in the long term they're a weighing machine. So
That's right.
while the near term movement may not, necessarily make sense given the numbers that we saw last night, I think in the long term you're absolutely right. The amount of disruption that's coming will be weighed appropriately by the markets over time, and I think we're trying to position ourselves in the fund to take advantage of that. We'll do a little bit more of a deep dive into the Tesla earnings report in just a minute, but one thing I wanted to hit on and kind of get your perspective on, Emmett, was we're kicking off, we're in the middle of earnings season right now, and Snap actually posted just outstanding numbers on pretty much every metric last week when they reported. Stock was up nearly 25% the next day. I think it's one of the names we haven't really spoken about a whole lot publicly, but it is in the fund, and we've done well with that position, certainly after that earnings report. What was kind of your thought on that report, and kind of where Snap is right now, especially as it relates to a lot of the AR, kind of things that they're focusing on right now?
Yeah, I mean, Snap has been one of those companies that just to me seems like it could be Facebook 2.0 in some ways. And, we remember Facebook when it first went public, it was sort of a disaster, and it kind of languished for a year or so. And I remember buying, in 2012 or 13, I bought like a bunch of call options in Facebook, or 14 maybe, but it just went way up, and I timed it just right. And I remember the stock valuation went from like, what was it, like 30 billion or 50 billion, up to like, it was like 40 or 50 or $60 a share, but then it went up to like, I think I got the options at $30 a share, but then the stock went up to like 200 plus by the time I kind of got out or whatever. And I think I exercised the options to shares and held them on margin and sold it like a couple of years later for a big return. But it was just kind of a revaluation of Facebook once they kind of turned on their advertising revenue like proper way. And I feel like Snapchat could be like 2.0 of that in a way, like a better version, like kind of like Facebook was a reiteration of MySpace. Maybe Snapchat could be like a reiteration of Instagram and Facebook kind of combined in some ways.
Yeah.
It just seems like the people that use Snapchat, a lot of them love it. Even if some people kind of graduate from Snapchat as they get older, I still think there's enough incoming people, and it's a good age demographic, and enough people stick with it where it could really have some lasting benefits, or lasting customers that stick with it for a long time. Just like Facebook, a lot of us signed off of Facebook and never use it, but there's still a lot of people that still use it,
Yeah, me too.
Yeah, but Instagram is really the big thing of Facebook. I think but Snapchat's kind of like that. It just seems, I've kind of experimented and played with it myself. I don't fully understand the product. I need to get more into the product of Snapchat myself, to be honest. But a lot of people I highly respect in that kind of like early adopter tech space love what Snapchat's doing. And I kind of, from a conceptual viewpoint, can see it materializing into being much more, especially with the founder. I'm very fond of him. I think he's very important.
Yeah, and from a valuation perspective too, I mean, one of the, I think, really surprising things this quarter was just how strong their margins were. They really were able to monetize their users in a way that, I remember when Facebook was going through, the switch to mobile as a primary means, they really struggled with how to kind of monetize their user base. But Snapchat right now, they released some stats. They've got 200 million daily users of their augmented reality products. And they're monetizing them like crazy. They're keeping their costs in check. So what you're getting is just this kind of margin machine, this cash cow machine. And then on top of that, I think they really are just one of the leaders in this emerging space. I mean, they talked a lot on the earnings call about how they're working with their retail partners who are really struggling with store closures and a lot of the pandemic related just drop in foot traffic. Where retailers would, get a lot of their sales. And so they're needing to find, kind of creative ways to enhance that user experience in order to drive sales on their channel. So they're talking a lot about, using AR to represent the way an individual shirt will look on you, and to really tailor the individual user experience in a way that, is I think going to be highly valuable to society overall and to the economy. So I think they really are in kind of pole position to take advantage of, kind of this intersection of, on increased online shopping, of course, but, kind of the next generation of that, where it's more individualized, but it's also improved by like augmented reality, where you, instead of just, models wearing something, and you're like, I hope that looks good on me like it does on that model. Instead, you're going to be able to say, oh yeah, here's how it would look on me, and here's how, the cloth would actually hang on my shoulders and that sort of thing. They've still got some work to do, I think, to really nail that down. But I don't see anybody out there who's kind of going after that as aggressively as Snapchat is, and I'm really excited to see how it pans out.
Yeah, we talk a lot about the metaverse, and a lot of people do. It's a key word thrown around, and I feel like if you had a word called augment verse, Snapchat would be like at the head of that. I think there's no one. Instagram has some filters and things, but I think Snapchat's way ahead of them, and it's going to be fascinating to see how they progress from here. And I think also they're building kind of a competitor to TikTok out in some of their functionality. I listened to their earnings call, and it sounds to me like I don't see why they couldn't do what ByteDance is doing with TikTok. I think they're already starting to kind of build that out, and they have a huge user base to kind of go with. And I guess there's some, proprietary algorithms ByteDance has built up that everyone values, that, zeroes in on what each individual person really wants to watch, somehow. But maybe that could be easily commoditized over to Snapchat's user base too, right? So I don't know enough about that particular algorithm stuff that ByteDance is working on, and why Snapchat couldn't do it, but it seems like a question worth asking or wondering, and the upside potential for Snapchat.
Yeah, absolutely. I think they said all the right things on top of having kind of blowout numbers. So I'm certainly excited to see kind of where they go from here. But
and also
it seems like they're really well positioned.
One last thing on that: Snapchat's a U.S. company, right? ByteDance is Chinese, and I know, like, in the last administration, it was like kind of a big deal. It almost got shut down, right? And so, what if
Right,
that kind of political environment comes back, even with the current administration? It could easily happen if somehow China and the U.S. seem to be, at each other's heels on things. Then maybe ByteDance gets shut down for real, and Snapchat's already got a formidable competitor for everyone to transition to who's used to using TikTok.
Yeah,
So in the U.S., that could happen.
Yeah, Snapchat, they're highly successful here in North America. If you kind of look at their geographical statistics, they're far and away that their largest market is in North America. So if that sort of scenario were to pan out, where there was kind of more nationalism maybe on both sides, and some sort of restrictions come in, I think Snapchat would be kind of the natural winner here in the U.S. But if that doesn't happen at the same time, then I think they do have room to expand, to Asia, to Europe, and elsewhere. So either way you cut it, I think they're well positioned to win.
Yeah. So should we move on to the earnings call and the results and such, or?
Yeah, I think we should. Obviously just huge numbers. I mean, that was looking through the report. Yeah, I remember when I first saw that EPS print of at $1.40, I thought, okay, must have been large credits. And maybe there was some FSD revenue recognition, something like that. But you start digging in, and credits were down significantly. There was no deferred revenue recognition from Full Self-Driving. It was really just really solid execution on the core business that really drove those margins. So that was what kind of stuck out to me, is that it wasn't a lot of the things that Tesla Q kind of waves about of oh, it was this one-time thing, or if you just this thing out, then really Tesla's not that profitable. But this was really surprising just on how productive the core business was. What was your kind of main takeaway when you were reading through there last night?
I just thought solid execution all around. That's what I've been wanting, is execution. They're growing. I feel like their margins have been hard to predict as of last few quarters, but I loved the automotive gross margins minus the number. I think I tweeted that Pierre Ferragu tweeted the 25.2%. I think that's when you minus the leasing in addition to the regulatory credits or something, then you get to 25. And that to me is a more true, or like, measure of the gross margin, automotive gross margin. I feel like that is fantastic. And that's before the Model S and Model X get ramped up, and these Model S and Model X, are going to ramp up and be even more extraordinary margins on those once they're ramped, So they lost money ramping the Model S, Plaid for the quarter, even though they sold 2,000, just the cost of ramping it up. overall was, more expensive. But now going forward, that they're going to do 10,000 plus a quarter of each, the S and the X, probably, maybe not the X this quarter, but I'm sure the S, then I think those margins will dramatically improve on those cars too.
Yeah, yeah, absolutely. I mean, that's kind of the crazy thing to think about. I mean, those are going to be the highest margin cars going forward, and then on top of that, you're going to have just continued build out. I mean, these margins, assuming there's nothing crazy that happens with the supply chain, these margins really should kind of continue to improve, which is just crazy to think about. I actually we talked last week about my EPS estimates, and I was obviously way under. I think everyone was under, but I'd say more on the conservative end. The crazy thing about this quarter was like even the most optimistic bulls were underneath where Tesla actually landed. So I went through and kind of updated the model to put in Tesla's actual. So I think it might be helpful just to kind of walk through and
let's
see that. So let's take a look at some of the numbers that came through here. So these are Q2. This is my model. We don't have every bit of data in here, but I've plugged in with my model to see kind of most likely where the numbers fell in. So updated the total S and X 3 and Y quantity. There was just a slight movement there. But getting down to one of the things we talked about last week was the end of period deferred revenue. So I actually updated the FSD take rate just based on how high their revenues were and their margins were. I had assumed that was going to drop a little bit to 15%. After looking at the numbers a little bit, I assumed that they actually increased their take rate a little bit to 18%. Now, I could be wrong on that. If that's too high and they actually did have a decrease, then what that means is that their actual core margins were higher or their ASPs were higher. So there's always a little bit of tension when you're trying to do this, but the fact that they had no deferred revenue recognition in this quarter just means that these FSD sales continue to be kind of growing. So now here we have almost $1.5 billion in deferred revenue that Tesla will likely recognize over the next year to 18 months, call it. So we were talking last week about how that's over $1 per share. So just looking out into the next 12 months, I mean that's like one quarter's worth of of earnings potential just on this one line item alone. And then on top of that, the go forward margins would be even higher. So that one really stuck out to me. Going down here, Pierre, like you mentioned, has that that margin that backs out lease revenue and ZEV credits or just credits. And what I've done here is actually backed out the full self-driving revenue because I think that's a little bit more kind of a pure manufacturing gross margin.
Yeah, that's true.
So when I did that, which is hard because you have to make an estimate, like I was saying earlier. Tesla does not.
That still looks like it's above 24%. Yeah.
Yeah. So 24.2. I mean, the previous high was 20.8% in Q3, at least according to my estimates. They were at 20.4% last quarter. I assumed there'd be like a 1% improvement. Instead, it was nearly a 4% improvement. I mean, that's just crazy. I mean, they've essentially got 25% gross margins, even without credits and without full self-driving. So you've got, just like those two line items, which I believe will continue to grow over time, will just be additive margin on top of like a 25% manufacturing gross margin on top of whatever S and X end up doing.
Wow. Yeah. It's going to be great.
So that to me really stuck out. That was just, really solid improvement. And then the energy gross margins also surprised. So these are their historical actual margins. There was a huge dip in Q1, which they attributed to the solar roof ramp. Q2, it actually reversed all the way to positive again. So positive 2.1% in Q2. And that was, I think, a big surprise. It was probably mostly related to energy storage deployments, which I think about tripled year over year, a little bit more than tripled, actually. So I think the margin on those probably helped to offset some of the issues that they're having with solar roof.
The total revenue was 2.8 billion. Is that 2.88 billion or what for energy storage?
That's so for energy, it was 800 million of revenue and 2.1% margin. So it's only $20 million of gross profit. But if you were to just say take a negative 10%, you would have been losing 100 million.
Yeah.
If you were kind of at where they were last quarter. So instead of losing 100
Yeah.
million, you're at positive 20 million. So that was I think a big surprise that the street wasn't expecting.
Yeah.
And then the same thing happened on the services side. So, on the services side, this is one thing I tweeted about was we may have a dark horse in the form of used vehicle sales. And that's exactly what happened. So
Yeah.
they've had really negative gross margins on this side of the business. I think they always intend to run it,
Real quick before you go into I think this is a really important thing we want to zoom in on. But before, I want to just mention one thing about the energy thing. The energy thing, I think what I also took away from their discussion on the call about the energy, and it just kind of reiterated what I understood from when Dave and I chatted to Brett Winton. He kind of explained it about how all the extra, they're gonna create as many batteries as they possibly can, and to go into cars, and this plays into their advantage because the energy demand is off the hook, and so is the car
Yeah.
demand. But when they have shortages in the car, they can just divert all the extra batteries to energy because they have like infinite energy demand, for power walls and mega packs. So I mean, I could see that easily zipping up to, multi-billions next year if there's component shortages and chips or in the car manufacturing, given how many batteries they're going to be taking in next year. The energy business
Yeah.
could really ramp up fast. I mean, not as high of a gross margin overall, but it'll still improve because as they do more, maybe it'll get closer to 10 or 20% as opposed to 2% this quarter, right? So
Yeah,
we'll see.
it also does, they've had this strategy for a while of really reducing prices on their energy products. I mean, they're very proud of the fact that they've got the lowest cost solar installations available in the country, at least here in the United States. But I think they probably, given how long their backlogs are, especially on the storage side, I think they probably have some room to, raise prices a little bit. So
Yeah, I do.
that's a lever
So.
they've been hesitant to pull. But I think given the fact that they're, so far backlogged on energy storage in particular, I think they can try to raise prices a little bit, at least until they get the capacity.
Yeah, I think on the residential side, like a Powerwall, I got a few Powerwalls in my garage. I can't remember the total. I think it was like $6,000 a Powerwall it came out to be or something like that. When I got it, maybe it's 10. No, it wasn't 10. It was like less than 10. I think. So maybe if it's $6,000 a Powerwall, maybe they can charge like $15,000 a Powerwall if you want it delivered and installed within a month, and I bet you there'd be a huge take rate and they'd just like ramp up that margin for those Powerwall. There'd be a lot of people in California during fire season. They're like, I just want the Tesla Powerwalls. I don't want to get a gas generator and I'll pay that, and help the grid too. Or maybe the state governments will help subsidize it with the grid, virtual grid. And I don't know, but I think they should have that option. It's probably not much money to put that option out there and just experimentally see how many people start clicking on it to order, a triple price Powerwall just to get it installed, get in front of the line, get installed right away.
Yeah, because it's a great point, and I think they actually are doing that on the automotive side already. I mean, if you look at
they are with the
the deliveries for the performance variants of Model Y and Model 3 are, what is it, like 6 to 8 weeks, something like that. Whereas the long range versions are saying November, so you got 4 months. So I mean, I think there could be supply chain reasons why that's true, but that seems unlikely to me. I think the more likely scenario is that they are pushing the higher end variants, assuming that people will pay some sort of premium or opt for the higher margin product as a way of getting it sooner. So I think in Q3 we'll probably see that on the automotive side. We'll have a higher ASP mix, just as people are paying that premium to get more performance variants in order to get it sooner. And that's something that they've been really effective at doing on the automotive side for a long time. Like we said last week, they've been attaching FSD and used vehicle sales for a long time. They've been doing a lot of things to really improve margins and ASPs, but they haven't done that on the energy side. So I'm kind of curious to see if they might start trying to price these a little bit more assertively, but we'll see.
Yeah. They can call it like the Powerwall Plus and just add a chip to mine a crypto of your choice at the side. On the side. A lot of people will start buying it then. It'll be crazy. I think there'll be a lot of demand. Just if you mention the word crypto mining with the Powerwall, you could charge $20,000 for one, and a lot of people would buy it. So they should just do something like that, and I bet they get like 100% gross margins.
Yeah. Well, and that's another kind of theory I had.
1,000 at least.
Absolutely.
What was your theory?
Another theory I had a while ago was that if the automotive backlogs get long enough, then you could have some sort of preferential full self-driving timeline. Get your car in 1 to 3 weeks if you opt for full self-driving, or 4 months if
If
you
you
just
don't,
want to wait for whatever's next. If they were to do
yeah,
something like that, I mean, that would have, I think, pretty profound impacts on take rate,
that's a good
especially
point.
with the new subscription pricing. So, they said on the call last night even that they're kind of playing around. They're probably going to move some things on the FSD subscription pricing over time to kind of see what the
Yeah,
right price is. But they have some kind of non-pricing levers that they can pull as well. So I'd be curious
yeah,
to see how that kind of pans out.
yeah. Let's
Um,
go on to the dark horse you were talking about. That
yeah, so
that's a big deal.
services, this is the kind of the part of the business that I think a lot of people forget about. It's things like the supercharging, the actual like maintenance and service that from the Tesla service centers, and then as well as like used vehicle sales. So when you trade in your vehicle, Tesla will then go and resell it and make a little bit of a profit. Used vehicle sales have been so strong. The residual value on these have been just so high across the board for ICE vehicles even, but Teslas in particular have been retaining their value really, really well. So that was something that they really highlighted as a reason why this service gross margin was so high. I mean, it's negative 7.8% in Q1, minus 21% in Q4, all the way up to
Wow.
minus 3.7% in Q2. So a huge, huge improvement there. Kind of doing that same thing that we were saying last time. If they were at minus 8%, it would have been a $76 million loss. Instead, it's only a $35 million loss.
Mm.
So I think the margins that they're seeing on these used vehicles, as well as the fact that they continue to attach full self-driving on the Teslas that they're getting and reselling. And if you look for inventory, there's essentially zero used Tesla inventory available
Yeah, I was just
on the
looking yesterday.
websites. Like
Yeah,
there
yeah,
was like one Model Y last time I looked, and a couple Model
yeah,
3s.
yeah.
So they're having no problem kind of offloading these, and they can dictate the prices pretty well. And so I think we saw this as another kind of surprise on the margin.
For
Um,
sure.
so going through this analysis last night, and the Bitcoin impairment was also less than expected, although that does get backed out. You had some reduction in the sequential research and development costs as well. So that came down, which helped the margin a little bit as well. So really just kind of going through this earnings report. I'll stop sharing my screen now so we can get back to the conversation. But
Hmm.
just kind of across the board, every metric that I was looking at as important, there was a huge, meaningful quarter-over-quarter improvement. So that was really surprising and really encouraging, because I kind of thought they get to these kind of margin levels, maybe 6 to 12 months from now. So the fact that they were able to do that so abruptly in the middle of this ongoing chip shortage, I thought was just incredible news.
I thought so too. Yeah, I mean, just one word just sums it up for me is execution. Just incredible
Yeah.
execution on the whole Tesla team that quarter, and hopefully quarter three and quarter four. These will each. There's just a big, benchmark for my conviction in the long-term success of Tesla. The near-term stock price can be wonky, but the and it's highly influenced by what's going on in the macro markets and such, and that's why we talk about that to start all our chats. But long term, zooming to the end of the decade, I still don't see how Tesla's not the biggest company in the world. This just strengthens that conviction. And ultimately, the one kind of truth dictating the long term inevitable stock price valuation of a company is the future dividends it pays out, ultimately discounted to present day value, right? And so
Hmm.
if you think about that and how much money Tesla will be making in 2030 and beyond, and how much dividends they could be paying out, like they could be paying a
Yeah.
dividend that's like equal to like a quarter of today's stock price, one day, so it's pretty insane.
Yeah.
Like
That's
how big
that's
they're going to
a
get.
really good point. And one of the things I've been focusing on is their operating cash flow and their free cash flow. And that was, again, just, monster numbers this quarter. I forget the exact number. It was somewhere over like $2 billion in operating cash flow. And I think there was about a million four, something like that, 1.5 million maybe on capital investment, capital expenditure. So they had, I think it was around 600,000. It could be slightly off there, but positive free cash flow despite building two massive new factories. And they did that on, only 200,000 vehicles. So if you extrapolate that forward and, think, okay, what does that look like when, you've got Model S and X up, you've got these more efficient factories up, Cybertruck up, and you're at like 1 million, 2 million, 5 million units. What kind of operating cash flow are they posting then? In the other interesting thing is maybe a near-term consideration is, they even paid down some more debt. So we talked about their capital structure a little bit and how more deleveraged they are compared to some of the other auto OEMs out there. But even this quarter, they paid off more debt, so they're deleveraging the business even more. Despite their amazing cash flow generation and the pristine balance sheet that they have, they're still in junk bond territory. So I think it's got to be just a matter of time before these ratings agencies re-rate the corporate debt on Tesla, because it frankly just doesn't. It hasn't made sense for a while now, but I think even more so now, it doesn't make any sense.
Yeah, yeah. And one thing I was going to say, I think like if I sell my used Tesla directly to you, and I don't go through Tesla return, if I'm getting a new Tesla and I'm going to trade in my Tesla, then maybe you buy it from Tesla used. But if I sell my used Tesla directly to you, does the full self-driving option continue on to you when you, register that new vehicle to your Tesla app with your name? Do you know?
I've heard mixed reports on that. There
I don't
was a
think it does.
story, yeah, there was a story maybe a year ago where some guy sold his Tesla with FSD to a dealership, and
Hmm.
then the dealership kind of advertised that feature, sold it to somebody else, and that functionality was removed by Tesla.
I think
Um,
so.
so that's my
There's
understanding
some
of how it
fuzziness around
works.
that.
But I've heard
Yeah.
other people say no, that's not right. FSD
Okay.
stays with the car for life. So
Okay.
I honestly am not sure, but I think if I were to trade in my vehicle, which does have FSD, I would do it to Tesla probably just to avoid that
Yeah.
uncertainty.
Yeah. Yeah. I wonder if there's some way they can, uh, figure out a way to imagine when there's millions and millions of Teslas in the country and people are just going to be trading it with each other, like for other, they'll just barter it, or sell it for cash to someone else directly without going through Tesla. Is Tesla going to be able to make some incremental revenue on every transaction of a Tesla car to someone else by making them pay something to get full self-driving reactivated, when it changes ownership? I wonder if that happens, that would be huge in the future too. It's like, imagine all the used Toyotas being
Hmm.
sold, and if Toyota made extra incremental revenue every time someone sold a used Toyota to some other person.
Yeah, yeah. Well, I mean, it kind of gets to this notion of Tesla's growing fleet itself is an asset,
Hmm.
because you get to have kind of these transaction fees over time, and like we were showing last week, you've got this massive pool of vehicles which could at any point opt for full self-driving, and just create this huge amount of cash flow to Tesla. I mean,
Hmm.
it's roughly 1 million vehicles. It's actually more than that right now, but let's just call it 1 million vehicles. At $10,000, per vehicle, that's
Yeah,
a huge amount of cash flow
it's a lot.
potential that obviously
Yeah.
100% of that won't convert, but you can imagine if they actually do solve autonomy and robo taxis are a reality, and you could pay, I don't know, 10, 15, $20,000 to have your car generate cash flow for you if Tesla does get that good down the road. And by that point, it's probably more like 5 million vehicles that it would be
Yeah.
capable of this.
Yeah.
That there's just this huge potential. So it's not just how many vehicles does Tesla manufacture and pump out of its factories. It's also how many of this growing pool will have kind of ongoing margin potential, and
Yeah.
that's where I think I get the confidence that Tesla will be the most valuable company in the world down the road.
Yeah. Or maybe what they could also do is, once full self-driving gets up to speed next year sometime, let's say, or the end of this year, whatever, it's like super good, anyone can use it. Then he just takes out the full self-driving for life package altogether. And it's the
Yeah.
only way to get it is a subscription. So then you don't have to worry about when you transfer ownership. If the person still wants it, they got to still pay that subscription price.
Yeah, I mean, Tesla's got all sorts of levers they could pull. They could do that, or they could just say, don't pay me anything, but I'll just take 75% of the robotaxi revenues or something
That's
like
true.
that. So
Yeah, they can do that too.
they have so much flexibility with how they price this, and we frankly are just in the really early days. You've got some early adopters like you and I who are paying for full self-driving, but I think once it gets to the point where it's actually providing just function as a much better ADAS system than it is right now, that will presumably tick up the FSD take rates and financial performance. And then the next level of it, when it gets to actual robotaxi and cash flow generation potential, I mean that's another level altogether of just the market potential. So it's very exciting to think about both of those things, because I think there's two distinct tiers there.
Yeah, exciting, very. Yeah. So the conference call was interesting too. I mean, I think one interesting thing is I've been from the old days, way back before it was on YouTube and stuff. I have a number to call in on and like get linked into the conference call directly on my phone, as opposed to like listening on the webcast or the YouTube. And I timed it today, and what I'm listening to is 30 seconds ahead of what everyone who's on YouTube or webcast is watching. Yeah. I don't want to like get that out there too. Not a lot of people watch this, so it's not going to be enough to like overload. But it's a nice little secret for people who are watching this. The next quarter, they can figure out the number to call and get a 30-second more real-time coverage of what's going on versus what's being recorded on the webcast.
And to be clear, we didn't trade on that or anything. There were no trades made last night. But
no, there's lots of people that call.
That's interesting though.
Yeah. But I'll share with you, Matt, if you haven't done it, and so next time you can.
Yeah, no, I've been doing the web-based one for a while now. That's helpful.
Yeah. But anyway,
what did you? So you got your question?
Yeah, got my question asked, and it was sort of a bittersweet answer. I feel like he was a little flustered, like, more work for me. But all right, I'll do one interview. He kind of like, I was asking for the moon, like knowing I might not get, we wouldn't get like commitment to like once a year Dave Lee or whatever. But hoping he could possibly say, sure, I'll do that. But at least he said, yeah, I'll do an interview. So that's great. And I think that it's like asking the genie for more wishes, with your Dave's going to ask a ton of great questions, and so will Rob. And I think it's way better than him doing his next interview with Vanity Fair, New York Times, or whoever gets him. Those people are always calling, trying to get interviews with him. And once in a while he agrees, probably reluctantly, But instead of doing that, we'll get so much more. Everyone will get so much more out of someone like Dave and Rob interviewing him versus like mainstream media, which asks the same questions over and over. Like,
I know.
How many times have we heard what's the regulatory credits about? Like he has to answer the same kind of questions over and over to these people who haven't studied it as much as we have, and Dave and Rob, obviously.
Yeah. I was glad to hear that. It was, I think one of the themes towards the end of the call too was it seemed like he was very focused on kind of his time left to kind of achieve his goals around SpaceX and Tesla. And it seems like he's making a more conscious decision to spend more of his time around kind of the product and, achieving these super ambitious goals that he has. And, I think taking time there, not doing these earnings calls, I actually thought that was probably a positive.
I do too.
I don't like it personally, but I think it's not going to hurt the stock any.
But I think it's good for him and the company to delegate to the management team now.
Yeah, exactly. So I thought that was actually probably good news. And frankly, for the last several quarters, he's been saying very similar things on these calls about, kind of how hard it is to manufacture and things like that, I think are interesting, data points, but, don't necessarily help the people that are on that call for the purposes of, a Q2 earnings release. So I think it'll be good. It'll help to kind of grow the bench. And frankly, they do need to be thinking, not immediately, but eventually about, succession planning and that sort of thing. So I think it's always a good thing to deepen the bench and get some more experience for the executives that are underneath them.
Yeah, absolutely. He did mention, he reiterates every time he can, like, designing an EV prototype is easy, but the mass production is like really hard. And there's a reason why only Ford and Tesla have not gone bankrupt also, and all this stuff. And it just kind of reiterates my conviction that there's no competition close to like mass producing an EV in a
Yeah.
profitable way. It just like until you have management teams as brilliant as Elon combined with them also sleeping on the factory floor, it seems like it's
Well,
not gonna happen.
yeah, I mean, Rivian's in the middle of this right now, and I
Yeah.
think frankly Lucid too. I mean, like Lucid's been talking about how we're the Tesla killer. They've got like these whatever crazy specs, and Rivian too for years has been. They've got like a good product. I think I'm actually like I hope they make it.
Yeah, they have a good
But
prototype.
scaling up is so
Yeah.
hard, and to scale it profitably. I mean to be able to get these 25% manufacturing gross margins like we've shown it, here in this call, that is
Wow. Yeah.
so hard.
Yeah.
It's so hard.
Yeah.
And they've got to do it when Tesla did it when there was no Tesla out there to kind of compete
Yeah.
with. And now these guys have to do it in a world where Tesla is going to be hammering them on price. So I don't know. I'm skeptical that they can, if they can, deploy at scale. I don't know how they're going to do it at similar margins to what Tesla's doing.
Yeah. I think the closest is the Chinese EVs.
Yeah.
They're sort of a distant second place in terms of efficiency and mass production success and designing, good EVs. I mean, they're producing a lot, and Chinese government, I think, is helping them drastically. It wasn't long ago that NIO was like one of the most shorted stocks. Like it was
Yeah.
like three
Yeah.
dollars a share, I remember, and everyone's like, I'm not touching that thing with the pole, because everyone just it was so obvious to so many people that it was about to go bankrupt. But I think the dark horse was that the Chinese government really was able to help them out and swoop
Yeah.
in some and no
They,
one.
they
And I
also
don't know why people
executed.
didn't
I
expect
mean,
that. They executed,
they they,
yeah. I
they
mean,
delivered,
perception,
they ramped. I mean,
they did.
it's hard, and I think they're a successful case study, though. Of
They
a
are
company
a
that's done it.
successful case study.
Granted, it's a completely different world in China to here,
China,
but
yeah,
I
that's the
think
thing.
Neo does deserve a lot of credit. I think.
I think they do. Yeah, they deserve a lot of credit. If they were trying to do that in the U.S., I don't think they would have survived. That's my thought.
I think
Is
that's
like,
true. Yeah.
but because they had some extra kind of like, help in some ways with incentive. Chinese state government, as we see with these policy, they have things in mind they want to happen, and whether it's EV adoption or, getting a stronger hold on their education of their population, with this new stuff, and they're going to put policies in place that affect the companies that are working in those spaces. So that was interesting. And then the 4680 cell production, I was really his comments on that. I was happy to hear. They said only, there was half a dozen major, innovations involved with the production, and maybe like one of them there's an issue with, they got to like work out, and he was talking about like the rolling of the dough breaking
Yeah.
something. I
That
don't
was
know, the
really
cathode
interesting.
material. Yeah, it was fascinating to hear. But I mean, it seems like it's an engineering problem, right? Not a science problem. So that, I'm confident the best engineers in the world can figure that out, and they will. So I was
Yeah.
happy to hear about that update.
Yeah, in the fact that they've got these plans in place to kind of scale existing battery supply while they work on 4680. I mean, to me, it's like they're doing all the right things. They're looking to the future with 4680, but they're also going to execute as well as they possibly can with the existing technology suite in Berlin and Austin.
Yeah.
So, I thought it was just such a super strong quarter. I mean, even the things like some of the hiccups on 4680 ramp, I think they were relatively small, in the scope of the whole company. So it
Yeah,
was
and
just a great call
he
out.
confirmed that they've structurally tested the packs and even like crash
Yeah,
tested them. That's huge. Like I didn't know they were that far
yeah,
along. Like there was that rumor of that pack being signed by people
right,
on Reddit
yeah,
that was put, and it was unsure if that was a 4680. Then some people tried to squash it, but I think that might have really been a 4680 pack that that was signed. I think that might have really been, but they tried to really squash it so that people, But the news is out now. The 4680 pack has been done, and whether that picture was a signed version of it or not doesn't matter anymore. We know that they've gotten the 4680
yeah,
packs ready and tested, so that's good.
yeah. Well, should we've been talking for 45 minutes. Should we go to a couple questions
Yes,
before we have to cut out?
yes, yeah. Let's go to some questions. Maybe we can go 15 minutes over if you're up for it, and just hammer
Yeah,
as many
sure.
questions as we can for 30 minutes or 20 or 30 minutes. Yeah. Question: Erica Lee says Roblox down a bit. Any thoughts? Is it related to Chinese stock Tencent? I mean, Roblox was down a lot yesterday. It's been down. People are still trying. We've talked about it, Matt. People are still trying to figure this one
Yeah.
out. I looked at the volume yesterday, and it was so low. Like it was down $4 yesterday, I think, and it was like 4 or 5 million shares traded on average daily volume of 10 million.
Wow.
So it was strange that it was down so much on such low volume too yesterday. Um, so I don't think there's any big news right now. It's just still the market's trying to figure out what is this Roblox, and there's no guarantee that Roblox is going to be some hugely successful company. But I think there's a chance it does, and that's why we've kind of talked about it and we think the 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 risk reward on it is pretty skewed in our favor. Since it's really just like a 40 billion market cap company right now at today's price, I think, and we think it could be much bigger. And it does have a partnership, I think, with Tencent in China. So I don't know if it's related to that. It might be, but we'll learn more on Roblox's earnings report in a week or two. So I'm excited to kind of learn more about it. Go to the next question. Emmett, thoughts on Palantir? Yeah, we haven't really taken deep dives on that one. From a high level, I like it. There's a lot of highly respected, intelligent investors, retail investor type folks that I really respect that love Palantir. And, I want to take a deeper dive into it to see if I can get more conviction around what they do and how they're going to succeed in the future. But, Matt, I don't think you've really had a chance to really take a deep dive. I know Peter Thiel is a pretty incredible person. That's kind of one of the founders of it. But what do you think, Matt?
Yeah, I don't have enough knowledge of it, frankly, to give any sort of intelligent comment. So I'll talk about things that I know about, and
Sure. Okay.
that's probably one I should put on my research list.
Yeah, me too. I need to research it further. Hi, Emmet and Matt. Question: which one is your second highest conviction stock? I believe Tesla is your first. I mean, I think we have most kind of delta dollar exposure to Roblox we've talked about, right? I mean, I think that's sort of
Yeah.
and that doesn't mean we think conviction in that, like it's just like Tesla's sort of like high conviction that we know it's a safe bet long term. Like we know for sure it's gonna like we have a high conviction it'll be the biggest company in the world in 5 or 10 years, And Roblox, it's not like a high conviction in that safe way, but given the current 40 billion market cap valuation, we think it could become, a multi-hundred-billion-dollar market cap valuation within a couple of years. And so whether we benchmark that at 25% or 40% or 50% chance, we're not sure. It could also go down to $10 billion valuation in a couple of years. And that's probably also like a 25 or 40 or 50% chance, So it's sort of one of those kind of binary outcomes we view like there's a lot of uncertainty around Roblox, but we think that the ingredients are sort of there for a significant chance of it being a very high upside play. So it's not something we would put all our eggs in one basket by any means, but it's one of those, lottery tickets we viewed heavily skewed in our favor.
Yeah, and I kind of feel a similar way about Square to some extent. The only difference being Square has already, gone up so quickly in the last, 18 months or so. I don't think there's, that short-term potential there nearly as much as there is potentially with Roblox or with Tesla. But Square, I'm looking at what they're doing operationally and their financial results, and then kind of their long-term roadmap, and I just think it's so smart, the strategy that they're pursuing on everything from hardware to kind of the customer value to these wallets that they're making, and the kind of transition to offering more crypto services, and it's just I think they're really positioning themselves to be a great financial player for kind of the next generation of financial services, while providing just an incredible user experience to a lot of the small businesses that are using their products. So I'm very bullish on them in like the next 10, 20 years, but I'm not so bullish on them in the next, I don't know, 1 to 2 years necessarily.
Yeah. That's like a safer conviction name for the medium to long term, similar to Tesla in a way. We don't really know what the stock's going to do in the next year or two, but we think longer term it'll be worth a lot more. What do you think about Elon's comment on million run rate for Powerwalls? sounds like 10 billion annual revenue. Yeah.
Annual recurring revenue, I think is what that stands for.
Okay.
ARR.
Yeah.
Yeah, I mean, they're gonna scale up energy overall. I mean, I people are so bullish on energy, but I think I've been I would say more muted in my optimism on the energy side. In the long term, I'm absolutely optimistic, but they're going to scale up on the energy storage, which clearly will happen with power walls. There is the market for it. There's clearly the market on the commercial and industrial scale, mega pack and power pack. But they don't have the cell capacity right now. So once they get that, I think it'll start making a difference. But then, like we saw, even with like the 2% gross margins they have, if you back out some amount of operating expenses, this is at current, a roughly negative, hopefully break even soon kind of business at the bottom line. So in the near term, I don't think it's going to be a huge driver. I mean, like if the energy side of the business got to $2 billion per quarter, which is roughly like 2.5 times the size they are right now, and the margin improves to, let's say, like 5% or something like that, it'll be nice. But I think it gets lost in the wash of the auto business, at least right now. So I think energy is going to be a slow burn over the next decade, and then at that point it's going to be like, oh wow, where'd this $100 billion per quarter energy business come from with 25% margins, and they've got these recurring revenue energy as a service business models that are so unique. I think that's going to be the commentary eventually, but it's going to take so long, and they've got to get all this hardware kind of deployed to get this large aggregate base out there, and then the margin will follow. But just right now, the margins are so small that I think it's good for the mission. It's good for kind of scaling up the production, but I don't think it's going to be a meaningful driver in the short term for the stock.
Yeah. Near term, I think I see it based on the comments as sort of like a hedge against inefficiencies in car manufacturing ramping up. So, if they have some kind of supply chain issues with chips or whatever it is, at least the supply chain issue won't be with batteries for ramping up cars, because they're going to just max order batteries, and whatever supply chain issue that limits their cars, they'll have all these extra batteries. They'll just divert towards energy storage at near zero margins, sounds like. So it won't be like a negative take rate on their balance sheet or whatever.
It gives them great operational flexibility right now. That's absolutely true. Yeah.
Question: given that a large portion of Elon's stock compensation has been reached and paid, what is your expectation for future accounting hits in dilution?
Yeah, so that dropped. I think it was like his portion. So his portion of the stock-based compensation, I think it was about 167 million this quarter, which was down quite a bit, I think, from where it was in Q1. I don't remember the exact number, but you have to keep in mind that the rest of the company still does have stock-based compensation as well. So I think the total number was closer to around 350 million of SBC. So that will continue. I mean, as the workforce continues to grow, we will continue to have stock-based compensation expense, but it won't. The portion that's related to Elon's award won't hit so much. If you look at their fully diluted stats, which is what the adjusted earnings per share is based on, it does take into account the dilution from those CEO awards and from the employee awards. So from my perspective, there certainly will be some future dilution as the full tranches get awarded and executed, but that's a fairly small impact, and most of it has already been taken into account. So I think this certainly will continue, but I think we kind of, there was this huge kind of peak of the SBC awards that were hitting every quarter. And now I think it'll be a less meaningful impact to the GAAP earnings per share, and should start to be a smaller, I think, impact to of the overall EPS impact.
Question from Scott Paulson: can you expound on your future dividends could be 1/4 of current stock price comment? Well, the way I think of it is, if Tesla's going to become the biggest company in the world in the future, and their current market cap is 600 billion, one quarter of that would be 150 billion. And so per year, 150 billion of dividend being paid out would be, 40, let's call it 40, 37.5 billion per quarter, I think. And so basically, I think if Tesla was valued at like a 40 PE ratio, I was doing the math in my head, and I think if Tesla was valued at like a 40 PE at that time, that could be their profit potentially. But I think they can grow, they'll be growing maybe 20 to 40% a year still at that point, not 50%, maybe not 40, but maybe 20% a year still with software-based things. And I think higher than 40 PE could be reasonable even for their market cap. But when they're generating, 50 billion plus of revenue of profit per quarter, that's 200 billion a year. I mean, if you do some back of the napkin math, I think that we can easily come to that, especially when you include robo-taxi and ride hailing and, millions of cars being sold a year at 25% plus margins potentially. I could spend 5 minutes doing the back of the napkin math right now. I've done it before, but I could see them easily making hundreds of billions of dollars per year in profit. And so, 150 billion in paid out in dividends seems very possible, when they feel like they have enough money to grow at 20 or 30% a year on their balance sheet. The rest of it might be paid out in dividend, a lot of it to Elon to divert to his Mars, ambitions, for example. And then the rest of the shareholders would also get a ton of cash. So, that's my thought. I mean, you see Apple today, 10 years ago, or 15 years ago, you would have thought Apple, there's no way they could pay a dividend like they pay today, but now they're paying a dividend that's, I'd look at the Apple stock price or market cap of 10, 15 years ago, and I bet you their dividend that they pay out today seems astronomical compared to what their market cap was 15 years ago. So that's kind of the comparison I think of, but I think Tesla's a much more magnified version of kind of the growth of Apple.
It's interesting, Emmet. So I did this analysis myself, like with a full detailed model, and I was getting very similar numbers to what you came up with there, just kind of walking through it on the back of the envelope. I mean, I was getting to roughly $100 per share of cash flow of dividends. I think I was assuming like a 60% payout ratio, something like that. And so, yeah, I think if you just look, you have to assume kind of robotaxi is a reality and make some reasonable assumptions around the rates there. You have to kind of do a really detailed analysis to make sure that it makes sense for customers, that it makes sense for Tesla, and you can't be double counting any of these revenue streams. But Emmet, it sounds like you and I both went about this question different ways and got to a very similar answer. So, and that's without taking into account a lot of these, like whatever they may end up doing with AI or some of these other services that we just can't really guess yet. So it could be well higher than that, or it could just grow at 20% a year, 10% a year.
Or what if they reinvent the airline industry with electric vertical takeoff and landing aircraft? That's possible. I mean, I think Elon is keeping his cards close to his chest on that, but he clearly has a design in mind, and he doesn't want to take it on anytime soon. He's overworked, and maybe by delegating more, not doing the earnings calls, maybe he'll make a concerted effort to delegate more and free up time to product engineering and architect stuff that he loves doing. Yeah. And that would include maybe designing like an incredible, electronic vertical takeoff and landing supersonic jet, Anyway, that's just.
Or he was even talking about maritime applications last night, which is a huge. I mean, that's one of the biggest polluting areas of transportation right now, and that could be a huge boon if they figure that out as well. So there's all sorts of optionality, as we've discussed in the past around this, but I think that's a reasonable starting point for, call it the year 2030.
Yeah. Thoughts about and just real quick before we go into this question, I think back 10 years when I first started investing in Tesla, self-driving wasn't even in my vocabulary. Like we didn't even think of that as an option. Or I think it wasn't until like 2014 or 15 when he started talking about it on Twitter or something, and it became like an idea. When he started trying to recruit people and saying like, "Shame on us."
When was the master plan part 2?
That was like 2016 or 15. But even before he
So was
published
it?
that, he
Okay.
had talked about on
Yeah.
Twitter about like
Yeah.
self-driving, recruiting people, and saying that shame on Tesla if they're not the leader in it, for example. He was really aiming for it, you could tell. But in 2011, when I first discovered Tesla and was like looking into it, most of this stuff wasn't even in my vocabulary or conceptual mind. Imagine in 2030, how many new cool things Tesla might like come up with that we're thinking now, like, wow, imagine in 2020 if we thought this would be happening, So anyway, it's just there's so
Yeah, I
much
mean, integrated.
crazy stuff.
Just to one example on that though is just like an integrated home that has a solar roof, power wall, EV charging, and HVAC system, and then with enough of those, integrating them into the grid and kind of offering those services into as like grid scale utilities. That would be like a pure margin business where you get the customer to pay for the hardware, you get a better customer experience, and then Tesla can have an ongoing recurring revenue stream in the energy side of the business while we're providing more resilience to the grid and clean energy to the grid. It's just like that's just such a better outcome for the world as a whole, and Tesla is perfectly poised to take advantage of the hardware sales and the recurring software revenue. So there's so much upside.
Yeah, like the idea of gigafactories wasn't even introduced until I think 2014 or something on an earnings call, or I don't know. It was just like there's so many cool things that are part of Tesla now that you had no idea about 10 years ago. So in another 8 or 9 years, there's going to be so many cool things that we have no idea about right now. Anyway, let's go on the next question. Thoughts about superchargers growth? Power as a service model? Is that what that?
Power as a service.
Maybe, yeah. The acronyms, I'm terrible at acronyms, and the less acronyms people use, the better for me. But I understand the EV acronym and ICE, but I'm just bad. So I think power as a service model. Business thoughts. Yeah. What do you think?
They gave some interesting comments when Elon was asked about opening up the superchargers to other OEMs, and he was talking about how they're probably going to change the way that those are priced. Where if you've got a slower vehicle that can't charge at 250 kilowatts, there'll be more of a time-based charge for them. So if you think about what that would do to Tesla's services revenue, that would be really helpful. But all this, I don't think services. Elon even said yesterday, I think it was, that the services line was never really meant to be like a revenue driver or like a margin driver. I've always thought about the service part of the business as kind of like running roughly at break even in the long term, with the idea being that you need service centers, you need superchargers, you need roadside assistance, all these things, just to provide a better user experience to drive volume growth over time. So there may be some opportunity here, especially if they open it up to some other OEMs. But then if they do that, they need to really ramp up the expansion of the overall network so that you don't have congestion. So I don't know. I think this is going to be a hard problem, but I don't. When I'm doing my modeling, I don't assume any sort of substantial margins coming out of this side of the business. All right. So Matt asks it. Yeah, go ahead.
You go. In a robotaxi self-driving car world, how do you think Elon's comment on allowing supercharging for other OEM cars, doesn't that warrant autonomous charging without human intervention?
I don't think they've answered this yet.
Yeah.
That's one of the big questions. There was the snake charger demo. It sounds like they're not really going forward with that. There's potentially power mats could be an option. But in my mind, you can solve this with humans, at least with the current technology set. There's almost always someone at a supercharging station. So like a very crude way to solve this problem in a self-driving car world would be, all right, if there's a robotaxi that needs somebody to plug it in and we don't have a technology solution for that, if there's somebody else there, give them like a $5 charging credit to plug in your robotaxi.
Just hire someone. Someone can be paid as an independent contractor $5 for every car they plug in, and maybe some superchargers would be like 10 of them an hour, some might be 100 an hour, some might be 5 an hour. But you'd have like almost like an attendant as like an employee temporarily to like just be in charge of. You have a special app that they're given to unplug and replug in cars, maybe.
Yeah. So I don't think we know exactly how this will be solved, but there's probably high tech solutions and there's also low tech solutions that I think could work to solve this. I've seen somebody comment that they think those Boston Dynamics robots, like those little dog things, should be trained how to do this, and then just have those at every supercharger. I don't think that's likely, but
Yeah.
it would kind of crack me up if that was the reality.
Yeah. I heard something like people, regular people like me and you could buy those dogs, or a regular person for like, a few tens of that, like $50,000 or 30. You can buy one of those dogs to like monitor your house or something. That's kind of scary. That's like you're gonna have robot security dogs pretty soon around
Yeah.
people's houses.
Strap a
That's
machine
not
gun
just...
to his back and just scare some people.
Yeah, maybe just a taser or just some scary voice or something. I don't know.
The dog itself would just scare me. There's no way I'm
I
messing with
think so
anybody who's
too.
got one of those.
Yeah, that would scare a lot of people. All I have to do is just like run a little fast and rise up on 2 feet, and I'd run for the hills.
Yeah.
Anyway, with this weird tangent. All right, let's go to the next question here. Question, Alex B says, what do you expect from macros by the end of 2021? Yeah, I mean, we've talked about a lot. We think the market's been trading sideways. We're not sure if the market's going to keep trading sideways for a while or not. We kind of think it won't, that, the growth tech stocks will pick back up after this kind of earnings cycle of we're in the midst of right now. I mean, we've seen Snap, Tesla. I think we're going to see a lot of beats in some of the popular growth tech stock names. Zoom's going to come up soon. I'm sure that'll do well. There's a lot of stocks that just are going to do well, and hopefully that kind of resets kind of the bull market for the growth tech stocks, the popular ones. That's kind of what we've been hoping for and positioning for, but we're not sure. I don't know. Do you ever want to bound on that anyway, Matt?
Yeah, I mean, I think we've seen a broad rebound in the market generally, but as we've talked about a couple of times, anytime there's been a little spook, growth stocks in particular have been getting hit hard. So a lot of the growth names are well off their highs, and I certainly don't know the future, but my sense is these companies are continuing to execute on the fundamentals, and it's kind of this trend that's been occurring for the last 2-3 decades now of software is eating the world. That's continuing to happen, and it's seemingly continuing to accelerate. So my sense is that as these companies kind of continue to just really execute operationally, and the world kind of changes to their favor. I think the fundamentals are going to have to drive some movement in the stocks eventually, at least of the names that we're tracking. But with macros, you never know. It's almost impossible to predict how they'll pan out. But I do think we'll calm down a little bit from where we are, with everyone kind of on pins and needles about what's the next great calamity that's going to attack us. Is it inflation? Is it the Chinese government? Is it the pandemic, the Delta variant? So I think we'll get through a couple of these and things should settle down.
Okay, you want to do one or two more questions, and we'll call it a day, I guess. All right, let's do two more. All right, Alex helping us behind the scenes here. So Brent McKinney says, 120 degrees Fahrenheit in British Columbia just a few weeks ago. If we don't mitigate global warming, what will the next 5 years even look like? I mean, there's 120 degrees Fahrenheit in British Columbia. That sounds like an extremely high temperature. I read something like Antarctica is even like really high temperatures right now at certain times. So there's some real extreme temperature movements going on. I mean, there's always been extreme movements in temperatures, so global warming, whether you think it's man-made or not, it seems like it's a thing, and it could be completely natural just with the cycles of the earth, or ice ages, just like ice ages come and go naturally. Who knows for sure, but it sounds like the right thing to do is to just move to sustainable energy as fast as possible, in case that's the major cause of it, and many people think it is. And I think it probably is, but I can't say 100% certainty. But I don't know how much it contributes to the acceleration, but it's very scary. Some of these implications of the Earth warming up, and I know there's like all kinds of technologies thrown around to potentially mitigate it. I'm not an expert on that stuff, but lots of ideas out there. What's your thoughts, Matt?
I mean, I think there's going to be a lot of consequences that are really hard to predict. But I think one of the trends that seems to be happening for a variety of reasons, and which I think could be accelerated with global warming, is just people moving to more rural areas or to areas that are less hard hit. California obviously is much more prone to this than say Michigan, where I live. I mean, California's already been dealing with the wildfires. We've talked about that a little bit in the past. Just this week, PG&E, I think it was just this week, announced a plan to bury, I think it was like 10,000 feet, or no, it wasn't feet. It must have been miles. Some huge amount of transmission and distribution infrastructure underground at a cost of $15 billion. PG&E's total market cap is only 17 billion. So
Jeez.
you think of all the pressures on Californians right now of just obviously fire season in general has its own host of personal issues, but then you've got just taxes and a lot of policies that are unfavorable to some folks, and then you've got things like this, which will increase electric rates significantly if they're going to spend $15 billion and then charge customers for that. There's going to be a lot of pressures that I think will make living in certain areas that are more prone to these sorts of disasters more costly, and I suspect that it will result in people kind of packing up and moving towards areas that are potentially less impacted. But there's going to be a million different implications of global warming, and that some good, some bad, most bad. And it's going to be hard to say what the world's going to look like in 5 years.
Yeah, there was some report I saw put out by NASA about like a natural wobble in the moon's like rotation or orbit, that in 2029 that's going to affect the tides in a way that I was trying to read it into it, but it just seemed like it was just saying that the tides are going to be exacerbated because of a higher sea level from global warming. So it's just gonna, maybe it wouldn't be such a big deal if there wasn't global warming going on, but because there's global warming and they anticipate the sea level will already be a few feet higher by then or whatever, that the tides are the exacerbated tides from this moon wobble could be catastrophic in some areas. So it's interesting. We'll see. It's kind of scary to think about the moon wobbling, but that's what they called it, and NASA did at least. So anyway, let's go to the next question. Question from Alex B. Any thoughts on Model A timing, scaling pace? Will it be comparable to Model 3 or Y scaling? I think this is like the Model 2, like the next lower priced Tesla he's referring to that would come out eventually.
Yeah, or the Tesla Q, as I've heard it being proposed as a naming convention. Just to rub salt in the wound.
Yeah, the Model Q. Call it the Model Q. Yeah, that'd be funny. I mean, I think they're going to keep. I think they're probably already working on preliminary designs. I think it'll come out in China first. My thoughts. I think they're trying to make a Chinese-made model, Tesla model, and I have a feeling it could be that first, but. I don't think they're going to want to announce until like the last second, because I don't think they want to cannibalize anyone thinking about a Model 3 or Model Y right now. Just like the Model Y, as amazing as it was, they really sort of downplayed it till the last minute because they didn't want to cannibalize Model 3, And so I think the same thing with this, and we'll find out about it, I think, in the next 2 years, maybe 3 at the most. I would think we would get kind of a prototype showing of it. With a timeline, a more definitive timeline. So it's possible next year, but I think more likely 2 or 3 years when they're getting their next factories ready.
I mean, if I had to guess, I mean, they still need to deliver on Cybertruck, Semi, and Roadster. Not that they can't pursue anything else until they solve those things, but if I just had to guess, I mean, they were hiring the China design team like last year. It's just based on that, to me, it seems more likely that, maybe they announce this or reveal it like in 2023 and it launches in 2024 or something like that. I think it will scale at a much bigger rate than we saw at Model 3 or Model Y. I mean, if Model Y is twice the size of Model 3 or 1.5 or whatever, Model Y is bigger than Model 3. I think a $25,000 starting price before incentives car would be, you'd have to plan for that to be, I don't know, 3 times bigger than the Model Y. Something, I don't know what the right number is, but they'll
At
have a lot
least
more
probably
experience
much.
at kind of scaling
Yeah.
and building more factories at that point. So I would think that it would scale way more rapidly than we saw out of Model 3 or Y.
Yeah, I think this gigapress manufacturing technique they do now, I think they'll get really
Hmm.
good at that and perfect it, and by 2 or 3 years from now, and they'll be able to produce a ton of them really fast, and we'll get a little closer to that alien dreadnought factory that conceptually that Elon has
Yeah,
described in the past.
I was going to say, actually, I mean, one of the things that I think kind of gets forgot sometimes is how important manufacturing is in the design process. So I think, as Tesla gets more experience with these gigapresses and kind of understands, all right, what are the tolerances? What are the things that would make manufacturing them more easy? Then
Hmm.
they can tie those into the design, which will,
Hmm.
improve margins and make the whole thing easier. But it is, kind of a circular collaboration process where it's not just the design team says, "Hey, look at this cool thing," and then tells the manufacturing team to go and do it.
Yeah.
There's tons of input. Franz has talked about this in the past, where he gets input from the manufacturing design team or the manufacturing
Yeah.
team. So I think that will be an important part of the process, especially
Yeah.
at that price point.
And I think one last thing on the Model 2 or Model A timing and design comparableness. I think I'm really interested how the Cybertruck production goes. There's a lot of unknowns there, but I think it's a fundamentally different structure.
Yeah.
This exoskeleton, for example, is going to be manufactured so differently, and so I think part of it is designed to be more efficient in certain ways to produce, and that's why they can have such a low price for it and so forth. So if they can really make good on the Cybertruck and get confident in that production process, um, I think it's very possible that the Model 2 might have a similar architecture, exoskeleton to that, just be like a smaller car, and they could produce it very quickly and efficiently potentially. So we'll see how they ramp up production of the Cybertruck, but I'm watching that closely. That's like a
Yeah,
real
that's a
incredible
good point. I
iteration.
mean, if the goal is to reduce the cost, I mean that sort of structure really makes a ton of sense. Where you're just
Yeah.
eliminating so many of the complex parts. I mean, obviously, getting rid of the paint shop is a huge cost savings too. So
Yeah.
yeah, maybe it'll look something like the Cybertruck but without a bed. So
Yeah. Yeah.
that's
Just a
one
smaller
potential
car that
option.
looks kind of boxy, but kind of they would make it look super cool, but it would just
Yeah,
be,
yeah,
it would be a fundamentally different car, because otherwise you're designing a smaller Model 3, and this Model 3 is already like a smaller Model S, so you can keep doing that, but it's not as cool to like differentiate, so we'll see.
yeah. All right. Well, I think we should
All
probably
right.
wrap it up.
Yeah,
But
I think so too. It's good, Chan. Next week, Matt, I don't think you're going to be with me on this, but we have a special guest lined up, surprise special guest lined up for that next Tuesday. So hopefully y'all can tune in and we'll have a good time chatting for next week's going live with Good Soil.
yeah. Well, thanks for watching, everyone. Thanks for all the great questions, and enjoy not seeing my face next week.
Yeah.
Take care.
All right. All right. Take care.